Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab. And today we are going to talk price patterns. So if you are brand new to all of this and you are saying like, I don't even know what a price pattern is, you are in exactly the right place. And if you are a follower of the markets, and we have a lot of those that I affectionately call the usual suspects in this class, and you are familiar with technical analysis, then perhaps this will serve as a good review, because today we are talking price patterns. We're talking price patterns for 3 weeks in a row. Last week we talked about flags. This week we're talking about pennant or triangle patterns and how we might use the recognition of those patterns to make more informed decisions on when we place trades, how we place targets perhaps, and when we might choose to exit a trade. And then next week, we're going to be talking about rectangles or stocks that are going, as I like to say, a whole lot of nowhere, and trend reversal patterns. So that's what's on the menu today. And I want to invite you to follow Connie Hill and I. Connie is in the chat with me today. She's a friend and a fellow coach. And if you aren't following us on X, you are missing out. My handle at Barb Armstrong CS, Connie's is at Connie Hill CS. So consider this your formal invitation. And I want to thank all of you who are here and bringing this class to life by being so participatory in the chat. If you're here for the very first time, feel free to type a greeting in so that we can welcome you to this community. But hello to Lisa and Chris and Kim and Eric and Kevin and Sharon and Travel D and Thomas and the rest of the gang. It's great to see you all here. Just before we get into our topic for today, I want to remind you that everything that we do here is for general information purposes only, none of it to be construed as a recommendation or endorsement of any particular stock, chart, pattern, or investment strategy. Also, know that we use the Paper Money software application on the Thinkorswim desktop platform. And although this is a great way to learn and to hone your skills, both with respect to how to place a trade on the platform and how to access the resources available, know that when you go to your live account, just because you've had good results in Paper Money doesn't mean that's going to translate. Because the market continues to change as we go from time period to time period. Okay, and know that past performance of any security or strategy doesn't guarantee future results or success. So I've designed this to be taught in about a 9-week rotation. And then what we end up doing is, in week 10, I'll add a bonus. So the last one was like the 7 things I wish I'd known about investing. Sometimes it might be Fibonacci's or something like that. So, we go through our 9 basics, and then sometimes we add a couple of bonuses at the end. Last week, like I said, we talked about flags. This week, pennant and triangles. And so we're going to discuss, how these price patterns are created. We're going to look at several examples and how they're created on the charts, and then we're going to go out to the Thinkorswim platform and look at a lot of those in a real life situation, if you will. So, how are these price patterns created? Well, they're created because we end up with diagonal and horizontal support lines that create, just let me get my drawing tool going here. So we end up with horizontal and diagonal lines that create both a floor and a ceiling, and they create common shapes. And so this we would call a symmetrical triangle because it's coming down the highs. We're seeing lower highs at the same rate that we're seeing lower lows. This is creating what pretty obviously looks like a triangle. And each pattern has a unique construction that forms over a given time frame. And we're going to look at a couple that are over a longer term time frame, and then some that are over a shorter term time frame. So, these price patterns can occur in all time frames. And it just depends on whether you're looking at a 5-year weekly chart or at a 1-year daily chart or Maybe you're looking at a 1 day, 1 minute chart, but we can see these patterns occurring in all time frames. And some of these patterns can help us generate entry and exit signals for swing trading. And we're going to talk about one of those today, or for trend trading, while others can help us identify a reversal pattern. And we're going to look at examples of all of these on the charts today. And, when we look at, okay, well, if I've determined an entry signal, then how can I determine an exit signal or a target? And we can use these patterns to help us do that. So that's what we're going to work on today. So here's our triangle pattern. We have a stock that's been uptrending. And then what you'll notice is that all of a sudden, we are not seeing higher highs as we had been seeing. So, here we had, a high, and then a higher high, and then a higher high, and then a higher high. And then all of a sudden we get up a higher high, and we get up here, and then we start seeing lower highs. And, when we follow this line through, it creates this diagonal resistance line. And then on the same token, we come down and we get this low, but then we start to see a higher low. And that's what creates this triangle pattern. And this can occur, and it can be either bullish or bearish. A triangle can occur within either a bullish or bearish trend. And in this case, it broke out to the upside. So what we saw was, in essence, a consolidation and then a trend continuation, because it had been uptrending. We had this period of consolidation, and then it continued to uptrend. But sometimes it can break to the downside. And then this becomes a trend reversal. Maybe I should have done it the other way. A trend reversal pattern. But many will say that you can look at this in any time frame, but typically, some will look at this being at least a month. And in the construction, if you have a strong trend, it will consolidate with these converging support and resistance lines, and then the expectation is for the uptrend to continue. But you can also, there are no guarantees. Sometimes it doesn't. And it doesn't become a continuation pattern, it becomes a reversal pattern. And so when this breaks out, if we're looking for a target, what some might do, just to totally mess up the chart, is to say, hey, if this is about $10 wide, then the expectation is, from the point of this breakout, we'd expect to move about $10 to the upside. And that's one of the ways we can create a target, whether it's breaking out to the upside or to the downside. A potential target is determined by measuring the width of the pattern. Yeah, and Jay, a good question. Is the measured move the same either on a break out to the upside or break down? Yeah. 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 Hey, I like the way you're thinking. You're thinking ahead. So that's all good stuff. So let's go out to the charts and have a look. Okay. So when we look at the overall trend of the market, it's been uptrending, but what we're seeing is a little bit of a pullback. So some might call that a bull flag, but still the market is close to all-time highs. Okay. And this is the S&P 500. If we look at the NASDAQ, kind of similar. So let's come and look at Starbucks. And this is looking at something that happened historically on the chart. And let's kind of look at it in a broader context. So we had Starbucks moving to the upside, And then it had this big Humpty Dumpty move, had a great fall. But what we started to see after that fall, which, it turned out the bottom of that was on April 30th, we started to see it move to the upside, right? And so we saw this low here and then a higher low. But yet, at the top end, what were we seeing? We were still seeing, we had a high here and then a lower high and a lower high and a lower high. And so, what the trader is looking for when we have this pennant pattern setting up is it going to break and continue to fall? Is it going to break to the downside? Or is it going to break out to the upside? And in this case, it broke to the downside. And so some traders, like especially if you trade options, you might say, ooh, here's a bearish opportunity for me. This is broken to the downside. I might, if I'm being conservative, say I'm just going to wait and see if this rallies. And what can happen, we have this diagonal support line that then becomes a resistance line. So it comes up into the neighborhood of this area of resistance and then rolled over and continued to fall. And, it's been a little up and down, but the overall trend has continued to be downtrending. And if we look at the last 6 months, this is a 6-month low that it's hitting today. Now, let's look at Tesla. And again, this is kind of a historical look where once again, and let's kind of come out to a longer time frame. And Tesla's a pretty volatile stock, right? Like it's had, like after the election, a massive trajectory to the upside, and then a massive fall to the downside. And it's, on its way back up again. Actually, not far from, where it was, at its 1-year high. But in the interim, we saw this period of consolidation where, we had this pennant pattern set up where we had a high, lower high, and then coupled with higher lows. And I always find that by drawing lines on the chart, it kind of helps lead the eye. And then it broke out, came back to retest, and we were thinking, is this going to hold, or is this pennant pattern going to continue? But it did break out again, came back, and then took off. So in this case, it was uptrending, went through this period of consolidation from, May until the end of August. So, this pattern was many months in the making. Now, some traders with this, and it is, so if we had been here looking at this, say on this day when it broke out, August 26th, and we had wanted to place a trade, how might we have measured the move if we were going to do this as a shorter term trade? Well, we might have said, okay, I'm going to come in and measure this. And one of the ways we can use the Thinkorswim tools is to say, okay, well, that was an $83, about an $83 move, the width of this pennant. So I'm going to come here when this breaks out and go about $83 to the upside. And that's where I'm going to set my target. And so we would have set a target around 420. And in this case, did it go up and hit 420? It did. And if we go back to our Starbucks example and we measure this move, and this was a really big move, has it come down to that level yet? It has not. So that was a $38 move. And so if we went from here, that's at 88 and we went $38 lower, you'd be around $50. So we would have to, if we wanted to draw that on the chart, we don't have enough room on the bottom of our chart right now. So what we'd have to do is come to our price axis, and say, hey, we don't need any room at the top. We need a bunch of room at the bottom. And so here's our 50. So if I came here and it was, how much of a move was that again? 38, I think. Oh, yeah, almost 40. So if I come from here where it broke out, or here, you know, we'd be approaching 40 or 50, just above that. So maybe around the $51 mark. And it certainly hasn't got there yet. And so, you know, some might say, well, here's an opportunity for me to buy a put. Jay is saying, what's the difference between a pennant and a triangle? And Connie actually is, you know, the expert on some of these terms, but I think you can use them somewhat interchangeably. The triangle pattern, I think, just tends to be a little steeper. You know, in that, like, we have a very, you know, big difference between our top and bottom here. Yeah. But I think of them interchangeably. Okay. So let's come and look at one that's a little more current. And that's, you know, Mickey D's. So when we look at McDonald's, I mean, this stock has gone kind of a whole lot of nowhere this year. It's only up 3%. This is our year-to-date chart. So we can see it came down and came back up again and came down. But, you know, starting in May, we had this high and then a lower high and then another lower high. Yet, you know, in June, you know, we had a low here and then we're seeing higher lows. And so some traders might say, if I'm going to place a trade, I want to place a trade when it breaks out of the pennant pattern, either from either, you know, to the upside or to the downside. But another way to look at it is to say, hey, well, this pattern is setting up. Couldn't I trade within the pattern? And if we look at this candle, this is a doji candle where, you know, it could change by the end of the day. But basically, the bulls and the bears, the buyers and the sellers are duking it out. You know, they are duking it out and they're kind of at an impasse. And that is considered when it happens at a support level, like it did here. And like it did here, we see this same type of, you know, we would call this a doji, or sorry, a hammer, because it has a smaller wick at the top and a longer tail at the bottom. But this one, it happens almost right in the middle, like a spinning top. And so again, at a support level, and what we saw the last time was that it did rebound off that support level, and here as well. Now, is there any guarantee that that's going to happen this time? No. Oh, yeah, we do. We have earnings tomorrow. Ah, snap. Okay, so, you know, when we look at the last earnings, you know, not a, you know, well, this earnings came on August 6th after, you know, and you know, or was it before? Yeah, and it did kind of gap up pretty nicely, but there is no guarantee that it'll do that. So if you want to be conservative, you might say, well, you know what? I don't want to mess with earnings. Now, if you're recognizing that earnings is tomorrow and you want to take advantage of a jump, if it in fact jumps, maybe we put a target in here of in the neighborhood of this previous high. Maybe we don't go all the way to 315, but we go to 310. And if we were to buy 100 shares, what could we do to protect us? Well, one of the things we could do is buy a protective put. And the way I like to think of a protective put is a protective put is the equivalent of, I want to go to Paris for Christmas, but just in case I fall and break my leg or stumble and break my arm, or, something happens and I end up in the hospital, I want to buy some short-term coverage just in case. And what I'm hoping will happen is that I will have bought this policy and I won't need it and it will expire worthless. And so, earnings can either be like stepping in front of a fast moving train, like Jay is saying, or it can be like jumping on a fast moving train. And do you want to miss the train if it's moving quickly, in the direction you want it to move? Or you can get on the train and it can go a whole lot of nowhere. So, but how do we know what's going to happen? And the answer is we don't. But this trend would seem to indicate that it might be moving to the upside. Now, earnings could change all of that. But if we came to our trade tab and we said, well, we want to put a target on this, we're going to buy 100 shares. Okay. How do I want to do that? Well, let's just buy 100 shares. And our plan, we're going to put an alert in afterwards at that 310 mark. But what we're going to do is change this single order to a first trigger sequence because we're going to come out and we just need coverage till Friday because this is a very short trip. Earnings is tomorrow. So we just need coverage till Friday. So we want to buy a put. And if we were putting a stop in, where might we put our stop? Well, we might say, if we were going to put a stop in, we might go 3% below that 294. So 294 times 0.97, around 285. So that would be below this 290 mark. Or you might say, you might say, well, I'd like protection at 290 as opposed to 285. Well, let's look at what it would cost. So we just need 3 days of coverage. At 285, it would cost us $63 to $74 for that short-term policy that does what? It gives us the ability to sell the stock at 285 should the stock really tank on earnings. But we're in charge of whether we pull the trigger or not. One of the frustrating things is that sometimes over earnings, a stock will gap down and then it'll rally dramatically throughout the day. So if you use a stop loss order, it might open at 285, trigger your stop and you're out. And then by the end of the day, it might be back up at 290, 295. And you're just going, well, snap, that didn't work out. But when you buy a protective put, you're the one in the driver's seat. You can choose to exercise it or not. Okay, so we're going to add this put at 285, and we are buying. They always want you to pay more if you're buying. So let's see, maybe we could get it for a little bit less. But, this is just for example purposes, so we're not going to worry about that. And so it's a way for us to take advantage potentially of a pattern that we see on the charts while giving ourselves some protection to the downside. And you might say, well, I'd rather pay the extra money and buy the 290 put. You can buy whichever one you want. This is kind of catastrophic coverage. So does it mean does this mean that, we would eliminate the loss? No, we're defining the potential loss. We could still be down $13 a share, if we got out at 285. But at least we're limiting our loss to $13 a share. So that's that. So we're going to put this in as a and we might just want to continue to own this, but if we wanted to put a target on it after earnings, we can decide what we want that target to be. Because if it gaps up past, if on the other side it gaps up, and if we look at, the last earnings, where how much did this move by? Well, it closed here the day before earnings, and the next day it went up by almost $9. So if it were to go up by $9 and it's currently at $298, might be at 309. And then maybe we'd say, well, maybe we want to make our target 315. So we can always add the target afterwards. Okay. Let's look at another one, Cadence Design Systems. So here's another one. Now, this one, we're on the other side of earnings. This stock has been uptrending. It's up about 10% year to date. But, from here to here, like that was up almost 70%. So it's had a pretty big move to the upside since, the April lows that the entire market saw. And let me just adjust my price axis again, because now we really don't need 30% to the downside. It's making our chart look wonky. So maybe we just make it 10 and 10. See, and it centers our chart. So when we come in here, we can see that it had this big move to the upside, and then it started to pull back. And we've seen this consolidation, since the beginning of September or middle of September over the last 2 months. And so it's come down here. We've got a lower high, but yet we've got a series here of higher lows. And today, this is one of those where, it opened lower. Somehow through the day, it came down lower, came up, and it's now trading higher than where it opened. So it opened at 330. It's now, trading at 335. And so if our expectation is that it might continue to move up, could we put a target around this line, say around 350? And you may be saying, well, if I'm buying 100 shares of stock and, my gain is $15. So actually, let's come and make this our calculator here. And you may want to also, this is a class on technical analysis, but we're seeing here that Wells Fargo is maintaining an overweight. They've raised their price target to 410. Like, that's off the charts. Loop Capital raised their price target on this to 400 from 390. Then you have Rosenblatt at 335, which is basically where it's trading right now. It's interesting how all over the map they are, right? Bard raised it to 418. JP Morgan to 405. So there's quite a range, but most of them are raising their price targets on this. So if we come to our calculator and say, okay, if I put in a target of 350 and what I end up making is $15 a share, and it might not get back up to 350, but if I divide that by what I'm investing, what kind of return would that be? 4.47%. So if you look at that and say, well, how much time am I expecting it to take? And if you're thinking, well, I could see that happening within a week, that's not, necessarily a bad way to go. So somebody saying, do I prefer, buying shares or call spreads? There's any number of bullish strategies you can use. One of the benefits of putting a target in is that when it hits that target, it will exit it. And whether you're doing that buying a long call as opposed to a call spread or buying the shares, and we're going to buy the shares in this class, and I'm not going to worry about position sizing or any of that. We're just going to say, okay, what was today's low? It was 325.29. And if we were to put in an exit 3% below that, that would be 315.62. And we're going to put our target at 350. Okay. So we're going to come into the trade tab. We're going to look at buying 100 shares, saying we want to buy custom with a bracket, and we want to exit either when it gets to 350 or if it goes down to 315.62, which is 3% below today's low. 315.62. And we're going to make both of these exits good till canceled. And this is a stock with a target. And the target is, whoops, I can type. Target is based on the pennant pattern. So a person is asking, when do you prefer buying shares over call spreads? And although I can get into that, this is really a getting started with technical analysis class as opposed to an analysis on trading strategies class, which I do a lot of in trading a smaller account. But and we do a lot of both buying shares and look at that, we're now in the green on this by 15 cents. But some might say, well, if I'm doing a trade with a target, and here's our target here at 350. I'd rather do a directional trade in that. Just let me put this in here. There's our target at 350. We'll show that on the right. Now, if we do a long call vertical in this one, what might not be as appealing is that if our expectation is that it might come up and hit this target and then come back down again and then go back up, it might be harder to get out for a profit with a vertical. That might not work as well as a trade with a target, such as a long call or buying the shares with a target. And so in this case, that is what might help me choose which strategy I'm going to use. Now, sometimes if a stock is a bull flag and it's just breaking out and it looks like this uptrend is going to continue, I'm just trying to think of a chart that might. So if we look at AMD is up over 100% year to date. And here we have something that's come up, pulled back, come up, and we have a bit of a bull flag happening. And so if we had an entry on this, a bull flag entry, you might say, well, I could do a swing target and buy the stock. But what I might do is just buy a long call vertical here because the expectation is that it's going to continue to move to the upside. Or let me just BAC. Yeah, so it's hitting a high today. If we're just expecting that trend to continue and you wanted to do a short-term income generating trade, that's another thing that can inform your decision. If you want to do a longer term, I want to buy and hold this stock, for the next 5 years, then, a stock is your obvious choice over an option which has a time frame associated with it and time decay. Yeah, so hope that helps. Okay, so let's look at a few other patterns here. Now, we've done 2 example trades, but I think the more patterns we look at, the more helpful it is. So here is Super Microcomputer, and we had a high here and a low here, and then lower high and higher lows. Now, we have just come through earnings on this. And so, you might say, well, hey, this is a similar low to this. Could this be bouncing? This is another one of those spinning top doji, type patterns. They report today after the close. So, again, it's one of those, if your expectation is that it might move to the upside, well, and it might, but look at what happened last time on, like this on August 5th. I mean, this can move big. But, in this case, this was standing in front of a moving train going really fast. And other times it might have gapped to the upside. Like if we go out, my spidey sense tells me this might be a gappy stock. So, it's gapped here, gapped up here. So here it was like, yay, jump on the train. And here you got squished like a bug. But we do have this pennant pattern setting up, and we might want to wait till after earnings to just see how that one plays out. Now, Netflix. And let's kind of hone in a little bit on this one, because here's an example where we had this, whether you call it a pennant or a triangle, we had a bunch of similar lows, or we had similar lows, but lower highs. And we had a pretty dramatic uptrend. Like, even with this pullback, this stock is still up 21% year to date, but it came down, and on earnings, it was trading above it. We had a diagonal resistance breakout, and in one day it went from diagonal resistance breakout to support breakdown. And it tried to rally, and it's moving to the downside again. So here's a bearish example. How about Autodesk? And again, here's where, when I look at a chart and think like, oh, past the Tums, this can move pretty dramatically, right? This is a $300 stock, which over the last 14 days has moved on average about $6.45. But, there have been periods where it's moved on average $8 a day. So when we look at this, higher lows, lower highs. And we'll just have to wait and see how that breaks. And some traders might wait until it breaks out one way or the other to consider, putting a position on it. Now with Amgen, and again, let's look at a longer time frame. This has been kind of consolidating since when? Since March. And it's now November. And we don't really have a clear breakout one way or the other. Now you might say, well, you probably drew that line today. I drew my line a month ago, and whoops. And this is where there is an art to technical analysis. So you might say, if you drew it this way, it's kind of flirting with breaking out. But, it hit the line, pulled back, crossed over, and it was like, was it a breakout? Oops, looks like it was a fake out, trying to break out again. And you might look at that and go, yeah, jury's still out. And when is earnings? Today after the market. So it'll be interesting to see what happens with Amgen. Biogen. We got the gens going on. And so here's one like Connie said, you might look at more as a pennant pattern, because we're looking at a much shorter time frame. But in this shorter time frame, we've got higher lows, lower highs. And this one did just come with earnings, on the 30th. And so we'll see, will this just be a short pullback and then it'll crack through or not? So the jury's still out. Costco. So again, this is taking a broader look. Now, some might have just drawn this diagonal line and said, we're waiting for a diagonal resistance breakout. But when we step back a little further and look at the chart, we are seeing higher lows. So, if you look at this from April on, we've got this really big pennant pattern happening, and the jury's still out on which way it's going to break. Now, had you drawn this earlier, you might have said, well, I drew mine this way, and sweetheart, I think it already has broken. But, lots of times I'll look at a stock and then may not look at it again for a while, and the lines I've drawn on that chart become outdated. And I'm not saying that to draw the line this way is outdated, but if you're looking for a kind of a more current, we seem to have some consolidation around here. It's come down and hit this line quite frequently in the last little bit. So, but this diagonal resistance line, I don't think many people would argue with this one. And this is, if you want to be bullish, we want to see a break above that. And you may want whatever you may want, but it doesn't mean you're going to get it. You know, so what I encourage you to do is just bring up a watch list. Today, I brought up, I happened to bring up the NASDAQ 100, but, you know, you can bring up any watch list that you want. So, you know, we could come here and bring up a watch list and just say, you know, let's bring up the stocks that are part of the Dow. And just as an exercise, so you've got 30 stocks here, and link your chart to your watch list, and then you can just click from one stock to the other. Now, I tend to sort them by symbol, just so that as the prices change, they're not flipping around. And then just start drawing some patterns on your charts as you see them, you know, to just kind of help develop your eye. Okay. Okay. So that's it for today. We did do 2 example trades. We did one on McDonald's where we bought a protective put. And then we did another one on Cadence Design Systems where we did an OCO order with both a target and an exit. So I hope that you found this helpful. Stick around. Up next will be swing trading. And I believe it's Mike Fairborn teaching that. But don't quote me on that. Let me see. I can look that up. Just one sec. I think Mike is, yeah. So Mike will be teaching swing trading next. So stick around for that. You know, we did look at triangle patterns predominantly today. I ask as we wrap things up, hit the like button. It helps move things up in the trading algorithms on YouTube. Subscribe to the channel if you haven't done so already. And don't forget to follow Connie and I in the land of X, Barb Armstrong CS and Connie Hill CS. I posted a short video on how to easily access analyst upgrades and downgrades using Thinkorswim. It's under 2 minutes. So please check that out on X and give it a like if you found it helpful. And yeah, stay tuned. Lots of great things still to come your way. Bye for now.